Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Hello, everybody. Alexis Christoforous here with Christina Kino. We've got Bloomberg News cross-asset reporter Denitsa Sakova with us here in our studios, in our Interactive Broker studio. I know you brought some goodies with you. Let's start with Netflix, Warner Brothers, though, because they've been in the news for the past weeks.
Warner Brothers stock was up 6% today. This extends the weekly gain to 9%. It has almost doubled since reports of the deal talks with Paramount emerged in September. In Netflix, we're seeing the opposite price action. Stock was down 3% today, and it has declined 17% since the streaming leader emerged as interested in Warner Brothers. The ticker is NFLX. On the week, it's down 7%. Of course, quickly rehearsing the deal, Netflix agreed to buy Warner Brothers. This is a massive shift in which a business, a Silicon Valley-based business and streaming giant, is swallowing one of Hollywood's oldest and most revered studios. There are so many things that people are discussing now. They obviously have to convince global antitrust regulators that the deal won't give it an illegal advantage. So there are many things that are happening, but the acquisition was first confirmed by Bloomberg Report on Thursday. Is a major pivot for Netflix, which has never made a deal of this scope in its 28-year history. With that purchase, Netflix became the owner of HBO networks, along with a library of hit shows like Sopranos, The Lotus. So really fascinating. They're also acquiring some studios and a lot of things to follow if, of course, this deal actually goes through in the end.
You mentioned Sopranos. I have a little trivia for you.
Oh.
I was actually on an episode of The Sopranos years ago. I know. I think it's the most watched thing anybody's ever seen me in. I was actually working for Bloomberg at the time, and they used a snippet of me on the, I think, Knights in White Satin episode.
Wow.
And to this day, I have people say to me, "Hey, I saw you on The Sopranos."
Oh my gosh, that's legendary.
Because of streaming services still running it. So that was my big claim to fame, by the way. 30-year career.
We're gonna
people know me from the 15-second clip on The Sopranos. All right, what else have you got for us?
That's amazing. I hope someone takes a photo of this this moment. Microsoft shares this week. Microsoft had a pretty tough week. It was down about 2%. It all came after information report that says that the software maker has lowered expectations for getting business customers to spend money on AI. Microsoft actually disputed that claim, but nevertheless, the company shares were down this week. Microsoft is also up just 13% year to date, which compared to the rest of the Magnificent Seven, it's definitely one of the laggards. Jeffries wrote that the information completely missed the point in its article, that this is not true. But some of the details were quite interesting. For example, one Microsoft Azure sales unit said that they were expecting to increase their sales by 50% in the last fiscal year. And what happened is that the current goal is just 25% of growth, so cutting half. And of course, everyone has been very jittery about AI spending. So something like this has really worried investors as we see all those big companies spending a ton of money on anything, chips, servers, and other expenses. And it's all a circular deal. So if one of them is starting to slow down, eventually that happens to the rest.
Yeah. All right, Lenitza, one last quick one. Salesforce.
Yeah, a good week for Salesforce. It gave an outlook for revenue in the current period that top analysts estimates, and that lifted the company for the week. Ticker, of course, is CRM. The company gained 13% on the week. The revenue number was very strong. It beat estimates. Current remaining performance obligations was also a very strong number, way above what the street was expecting. They have this new product, Agentforce, that was released earlier this year that is doing pretty well. But what TD Cowen is warning is that the good sales numbers are limited so far, and this is only experimentation stages, so we shouldn't be too fast to be too excited about this. The company was down 29% before the earnings report, so some relief there, but it's been a tough year.
Yeah, I mean, a lot of relief over those results, obviously, and it looks like it still is very much the focus on AI, but in this company's case, it's kind of their usage of AI, right? With the
there
agentic,
was concern, right, that perhaps AI would step on some of their product capabilities.
Correct.
But I think that these results sort of put that to rest.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.